What's up investors, Snir is here. This week's video was supposed to be a completely different one, but since this week we had the Didi IPO followed by the regulatory crackdown of the Chinese government, I thought it's a more pressing subject to talk about. Didi, which is the Uber for China, IPO'd in the American market last week and raised more than $4 billion from American investors, immediately followed by a regulatory crackdown from China 2 days after the IPO, announcing that they cracked down on a privacy issue with Didi, followed 2 days later with the announcement that they removed Didi from all app stores in China. This move immediately destroyed about 25% of the value of Didi, immediately after the American investors poured in $4 billion. Now add to that a crackdown that the CCP had on Alibaba with the disappearance of Jack Ma that drove the Alibaba price so far down that many famous value investors got into action, like Charlie Munger and Mohnish Pabrai, and you have the perfect storm where everyone, especially in the value community, talking about how all these stocks with the recent crackdowns got too down that it's now a value proposition. I, on the other hand, think that the recent actions with Didi and many of the other actions that the CCP did over the last years proves that China is too risky for the average guy. And in this video I will cover what those risks are and why I think that investing in China is too risky for the average guy and you should avoid it. Guys, before we begin, please leave a like on this video as it takes a lot of time to make this kind of videos, and I'm pretty sure that after this video I won't get any funding from the Communist Party of China, so a like will be extra appreciated. Thank you. Before we dive into the financial and business side of things, we need to talk about the elephant in the room, which are the atrocities that China commits every day. This connects both to the morals of investing with China, but more importantly for us as individual investors, to the risks of investing with a regime that commits these kind of things, and I will connect to that later. China is ruled by the CCP, the Communist Party, for 100 years now, and the CCP is a dark and totalitarian regime responsible for the deaths and oppressions of hundreds of millions of people through the years. And this is important to remember that the Chinese people are not the CCP. The CCP controls China, but that doesn't mean that every Chinese person is responsible for what the CCP does. And this is important to remember, that China isn't the CCP, but the CCP controls China. So when you invest in China, you need to consider the CCP, not necessarily the thriving of China, but the CCP actions and what they will do with your investments. Here's a completely non-exhaustive but representative list of recent actions done by the CCP that demonstrate their atrocities. Taking control and oppressing Hong Kong despite their agreement with the British not to do that when they left. International abuse and constant calls for a hostile takeover of Taiwan. The massacre of Tiananmen Square. And the ongoing genocide of the Uyghurs, a minority in China. Now to the moral side, there is a huge movement recently that called ESG for moral investments with environment consideration and things like that. But I will start easier with you. Don't invest with a regime that commits genocide. That's much easier in my opinion. But beside that, the point is that the CCP is completely unpredictable. You can't think you can predict what this dark regime will do next. They don't answer to anyone, not to their own laws, and obviously not to the international laws. So you can't really say, oh, they did this rule, so they will continue to obey to this rule. They won't. This is a regime that commits genocide. You don't want to mess with this regime or think you can attempt to think what they will do in the future. Moreover, based on history, the CCP tends to prefer itself and itself alone. Again, I'm talking about the CCP, not China itself, or otherwise Mao wouldn't murder tens of millions of Chinese people. The CCP prefers itself alone, and that leaves you as a foreign investor out of the equation. Sooner or later, the CCP will crack down on foreign investors, and this is a risk you need to know about. And again, you might say, but the CCP won't destroy all their businesses systematically, they want China to thrive. But this is thinking about China, the Chinese people, and the CCP collectively as one unit, and it's absolutely not. China, Chinese people, and CCP are separated entities. You can't predict what the CCP will do, and they won't necessarily do things that are good for the Chinese people or for China, and absolutely not good for you. It might even be a case where China thrives and the company in China thrives really, really well, but the CCP cuts you out as a foreign investor, as we've proven countless times before, and we will get to that. So even if China will thrive, you're not having any guarantee that you will thrive with it or you have any real ownership. Remember that the CCP is a communist party. They will cut you down if they want to. Next, let's talk about the financial environment, which is most important for us as investors. The regulatory crackdown on Didi sends a message by its timing, not necessarily by the regulatory crackdown itself. The timing is important here because the Chinese authorities knew everything that there is to know before the IPO, yet they chose to do the crackdown immediately after the IPO, sending a message both to investors and to entrepreneurs in China. The message to foreign investors is that the CCP will crack down on companies that offer their shares to foreign investors. They sort of tricked all the hedge funds and all the bankers in America. They first took their money, $4 billion, and then they cracked down on a company, destroying massive amount of this value. And the message to Chinese companies is that having their shares publicly traded for foreigners and specifically for Americans is not welcomed in China. Now, this kind of politics is for them to solve. I want to focus on us as foreign investors. The message to us from the CCP is that you should never feel safe to invest in a Chinese company because the CCP will crack down on them if they want to send a message to you as a foreign investor. Next is the business environment. In recent decades, China opened up its economy and its markets more and more, leading to more free markets and more openness to the world. But the important thing is that these markets are not really free markets. And it was proven through the story of Jack Ma and the Ant Group. Once Jack Ma said things that the CCP didn't like, they took him away, making him disappear for a few months and not even really coming back in full force up till now, almost a year later. And it proves that in the end, the CCP controls everything. And they control Jack Ma, they took him away, and they control the businesses because they blocked the IPO of Ant Group, which is supposed to be the biggest IPO there. So we need to remember that every thought we have on business world derived from democratic capitalistic nations like in the USA or every other nation in Europe or many others is not applicable for the CCP of China. Because in the end, the CCP have complete control on all the businesses there, and they don't need special rules or special conditions to take control over businesses. If they want, they just take control of Jack Ma, the CEO of Alibaba, they stop the IPO of Ant Group, and they can do it for every business. And this is something you need to remember. You never really own a business in China. After all, the stock market is a way to own shares in a company, but you never really own the company because above you there is always the CCP that takes complete control as it likes. And you need to remember it because the control schemes we are used to in a capitalistic nation does not apply to China. This effectively leads to a systematic black swan in the Chinese market. You know that there might be an event in which the Chinese government takes control on the company. And this is a systematic black swan you absolutely don't want in your investments. The last issue I want to talk about here is related to big Chinese stocks traded in the US market. Things like Alibaba and Baidu. These companies are not really traded in the US markets, but they are traded through a mechanism called VIE. You see, the Chinese rules outright ban any ownership of any foreign investors in Chinese companies. So selling shares in these companies is not really possible. The trick to circumvent this rule and have access to foreign capital is through the mechanism called VIE, variable interest entities. These are entities that effectively mirror ownership in the companies in terms of access to revenues without really having any ownership of the company or controlling stake. If it sounds like it's a try to trick the Chinese government, it's because it is, and this is why it's so risky. It's not a problem until it will be. We are yet to see significant dividends paid through these mechanisms, and we don't know if the CCP won't crack down on these companies extracting Chinese capital outside to foreign investors. As stated before, the CCP isn't stable and isn't predictable, And this kind of rule and mechanism gives them the perfect excuse to belly up on for an investors should they want to. You might wake up one day finding out that Alibaba is growing and is a great company, and I really think they are a great company, but you as a foreign investor have no real stake there. And you can't get your fair share out of it because of the CCP. So the company itself might do great, but the CCP is still a very high risk, and you might find yourself with nothing because of the CCP, not necessarily because the underlying companies you invest in, did something wrong. So guys, that's it for this video. I hope you enjoyed it. Please leave a like for this video as it helps me a lot, and subscribe if you're interested in any other content about individual investing in an intelligent way. I'll see you up in the next video next week. Bye bye.